In this video, I will share with you my super effective strategy for finding trends and even more effective in finding reversals using Heikin Ashi chart candlesticks. Now, let's wait for the deal to close and let's start analyzing. Hello my fellow traders, in this video we will analyze Heikin Ashi charts and I will show you my favorite strategy to find trend reversals. So, to begin with, we will figure it out what Heikin Ashi is and how this type of chart differs from our usual Japanese candlesticks, Japanese bars. And after, I will show you how to use this type of chart to find trends and also what is the most important trend reversal point. And at the end, as usual, I will show you my own strategy and we will hold a trading session using it. But before we move on, I just wanted to say that I can still see that a small percentage of people who watch my videos are actually not subscribed to my channel. So if you like this kind of content, click that subscribe button so you don't miss any more videos with analysis. But now let's get back to the video. Okay, so what is Heikin Ashi? This is one of the types of charts that we use in trading and it actually means average pace. And this is exactly what this indicator allows us to see. Thanks to this type of chart, we can really accurately find strong trends and more importantly, trend reversals. And to enable Heikin Ashi, click on the chart types and choose the Heikin Ashi instead of usual Japanese candlesticks. But now let's move on to our platform and learn some more information. Let's talk about Heikin Ashi now more in depth. So here you can see two different charts. It's the same currency pair at the same time, but the top one, this is a typical Japanese candlesticks, and the bottom one is a Heikin Ashi candlesticks. If we're talking about the standard one, we know all of them, we read them well, so basically the main value shows us the opening and the closing of the candlesticks, and at the same time shadow shows us the maximum or highest and lowest point of the price. With the red candlesticks it's vice versa, top and it's opening and bottom is closing, and the shadow still shows us the the lowest point, maximum point of the price. And every next candlestick opens at the closing point of the previous one, easy. But if you look at the Heikin Ashi chart, it's different, right? Every candlestick is somewhere in the middle of the previous one and in the next one, right? It happens because Heikin Ashi chart doesn't show you the real price. It shows you the basically average value here. So if we take this candlestick, the opening point of this candlestick is not the price, it is the average value of a previous candlestick. And the closing point, this is average value of this candlestick from the opening. Interesting, right? So that's how every single candlestick is somehow connected to the previous and the next candlestick. And that gives us the ability to look at the chart and it looks smoother and it gets rid of unnecessary visual noise. One of the main purposes of Heikin Ashi chart is searching for strong trends. Let's look at this example. So right here on our typical Japanese candlesticks, you can see sometimes red candlesticks, which can scare off beginners, given the signals that there's going to be the reversal of the trend and you need to open the deal for a downtrend. But if you look at Heikin Ashi chart, you can see here that this is a really strong uptrend. And trend on Heikin Ashi chart is candlesticks of the same color. So for example, with uptrend, there is no shadows under it. The shadows only are on top of it. And right there, we can open the deal on the uptrend. Same goes to the downtrend right here. So let's look at the example, and right here on Heikin Ashi trend, you can see really strong red candlesticks right here, and there was no shadows there. And at some point, when the trend became really weak, candlesticks became smaller and we have really strong shadows on top, signaling that might be a reversal of the trend here. As I told you before, the Heikin Ashi is a great instrument not only for finding strong trends, but also for reversals. And this is the baseline of my strategy. Let's look at this example. Right here, we can clearly see a downtrend, right? We see big red candlesticks with no shadows on top of them, right? And at this moment, we will continue to look at the chart, and we're waiting for candlesticks like this. This is doji candle. And let's do this. And this is a candlestick that has really small body and at the same time has really big shadows from both sides. Doesn't matter what color this candlestick is, we're interested in the candlestick after this one. We're waiting for the opposite color. Well, in our case, it's going to be green, right? And this candlestick is not supposed to have any shadows on the bottom. And right here, we actually have it. And right now, we are going to change our candlesticks back to Japanese and mark this little moment that right here, we can open our deal for an uptrend. And in this indicator, we are opening deals not as usual for 3 minutes. We are using 5-minute expiration here because Heikin Ashi is an basic average price point. That's why we want to make sure that there's not going to be really high peaks of the price at that point. And as you can see that our deal would be closed in black. Same goes to our deals for the downtrend. For example, right here, we can clearly see an uptrend, right? We have strong green candlesticks with no shadows on the bottom. We are waiting for a doji candle. See it right here, small body, 2 shadows on both sides. And let's point it right there. And this is the point for us to enter a deal for a downtrend. Let's change the candlesticks here and put this little thingy where we would open our deal for a downtrend for 5 minutes. And as you can see, this is a downtrend and the deal is going to be closed in black. Like in any other strategy, using Heikin Ashi to find trend reversals, I'm not using only one instrument here. I'm using more, and I'm using those from technical analysis. And this is 2 indicators, 150 EMS, and second one is stochastic escalator. We talked about both of them in great detail in my free course. That's why we're not gonna point our attention at them right now. But if you want to learn more about them, other indicators, and additionally risk management and technical analysis, you can text me on my Telegram. Link is going to be in the description box down below. But let's get back to our example. Right here, we can clearly see a downtrend. At the same time, we can see that 150 EMS is lower than our chart, and that gives us the possibility to open the deals for a upward trend. And stochastic is close to the level of oversold. That's why we're going to continue to look at our charts and find our signal. So there's the signal. We can see our doji candle, really small body and really big shadows on both sides. So what that means that right now we need to look at other indicators. 150 EMS is giving us the ability to open us the deals for an upward trend, and we're waiting for the next candlestick from Heikin Ashi, and of course the reversal of stochastic, and it happens right away. Next candlestick giving us 2 additional confirmations, so the candlestick with no shadow and stochastic that confirms us that we can open a deal for an upward trend. So changing the candlesticks to normal and opening the deal right here, and opening the deal for 5 minutes, as I already told you. And let's wait and see what's gonna happen. As you can see, the price is shooting up and continues to move upwards, and that means that the candlesticks saying us that our deal is closed in black. Same way, of course, goes with this strategy for a downward trend. Let's look at the example here. So right now, we can see that there was a really strong downtrend, and this is the beginning of an uptrend, right? We're waiting for our doji candle right now, and it gives us the signal that might be a reversal of this trend, and we see what's going to happen next. We see 3 candlesticks of red color, but every of these candlesticks, they have a little tail on the top, the shadow. So we're ignoring those candlesticks, and we have the 4th one with no shadow on top. That means that there is a signal of 1 indicator, and now we're waiting for a stochastic. So the 2nd candlestick shows us the really great confirmation from stochastic. EMS is higher than the chart, and let's change a candlestick, and that means that we can finally open our deal for a downward trend for 5 minutes. And of course, you can see that there is a really strong movement down, and our deal is going to be closed in black. Let's finally start with our trading session, and first of all, what we need to do is get our platform ready. Expiration time, as I told you, is going to be quite big, 5 minutes. Amount of money that we're going to use is going to be $600. It's approximately like 2% from my balance, and the type of the chart is going to be, of course, Heikin Ashi. And let's add our indicators, moving average and stochastic. So with stochastic, we're not changing anything in the settings, but moving average, we are changing as usual to 150 and EMA type of moving average. And of course, I'm going to change the color to yellow because I like it more like that. Now, let's start, and I actually think that we're quite lucky here because this is going to be the first deal that we're going to enter right here, right now. It's a little bit late because we have already a couple of green candlesticks without shadows, but we see a great signal from stochastic. Chart is higher than 150 EMA, and in general, that's a really good moment to open and enter the first deal. And see, usually it's quite hard, and you have to spend a lot of time waiting for the place to open the right deal, and yeah. But we're gonna open all our deals in 5 minutes. That's why I don't see the point to sit here and wait for 5 whole minutes. That's why I'm just gonna continue and try to find another one so we don't waste our time, and this video is not gonna be like an hour-long video. So yeah, let's get to it. Okay guys, so let's open our second deal right here on the downward trend. Same thing, $600, and we have a doji candlestick. The chart is below 150 EMA, and of course the stochastic gave a signal as well. And let's continue to find other ones. Okay guys, so the first deal is already opened, and it closed, and it's closed in black. So let's continue and let's try to find some more. Okay, let's open our third deal right here. You can see the doji candlestick here and the first really strong, powerful candlestick right after without these shadows, and stochastic gives us the signal, and the chart is of course higher than 150 EMA right here. And the second deal is also closed in black. Amazing job. And of course, we're just gonna continue and try to find some other ones. Okay, so the third one is also closed in black, which is amazing. And let's try to find the last one for today. because again, we don't want to do this video for like an hour, and let's just try to find it. Okay guys, so this is gonna be the last one, and right here it's a bit risky. Maybe it's not gonna be the last one, but still, if you look at stochastic, it's like giving you signals all the time. Big volatility here, but let's try it. As I usually say, that's why I'm here, for you to see how to risk and how to not. But here right now we have Heikin Ashi signal, EMA signal, and stochastic gives the signals right now, but it's still risky. Let's continue. I'm gonna change the type of chart to normal candlesticks, and we can look at this one more in depth, you know. Okay guys, so looking at this deal, I feel like we're gonna have a problem here. As I told you, maybe this one is not gonna be the last one. That's why I'm gonna continue, try to find like some more ways into a deal, some other currency pairs for us to just, you know, cover the money that we might potentially lose in the risky one. But yeah, let's just continue trying to find something else. And yeah, unfortunately our risky deal closed in red, but as I told you, it's okay, we're gonna find something else. And I'm gonna try this one. I'm gonna try to find something really good where I can be sure that the deal is gonna be closed in black, and that's why I'm gonna try to find another one where I'm gonna open 2 deals to get our money back, the ones that we just lost. Well guys, finally we found the last deal for today, and it's gonna be doubled for $600, both of them, and it just got to 150 EMA. Stochastic gave the signal, and we just got the first green candlesticks that we need. Let's get our chart to the typical candlesticks chart that we used to. Let's hope and pray that it's gonna close in black, not in red, in black. That's what we need. Goodness gracious, guys, finally we did this. It was really nerve-wracking right now, but we closed both of the deals in black. And as you can see, this instrument is really great for you to use it. And yeah, that's gonna be it with this. Okay guys, I just showed you my Heikin Ashi strategy and also showed you this strategy in action. But if you still have any questions, please leave them in the comment section down below, or you can also text me on my Telegram, which I will leave the link in the description box down below under this video. And by the way, if you want to get my free course on binary options, you can text me on my Telegram for that, and you will receive 9 lessons on indicators, risk management, technical analysis, completely for free. And if you want to improve the Heikin Ashi strategy, I recommend you to watch this video in which I talked about MACD indicator, which also works perfectly with Heikin Ashi bars. But that's going to be it for us for today, for this video. Thank you so much for watching, and I will see you in the next video. Bye bye.